Are you ready to take your business to the next level? Every day there are countless books and articles that are published offering the key on how to make your business a success. It's easy to feel overwhelmed trying to keep up and run your business. That's why Deb Creer created the Business Power Hour. Keep up on the latest trends, best practices, and techniques for how to make your business a success. Let the Business Power Hour do the heavy work for you.
Good morning, good morning. I am Deb Creer, and I am passionate about giving professionals the tools that they need to make themselves and their businesses as successful as possible. And I love it. I absolutely love it when I get to talk with people I really know. What is it? IRL. Now, we haven't met in the real world, but we are in the same wonderful weekly networking group. And I just thought, okay, we have to have this gentleman on because he has such great information. So please join me in welcoming Scott Lask to our program today. Welcome, Scott. How are you?
Oh, Deb, thank you so much for having me. It's really a privilege to be here.
Well, we're just going to make everybody else in the group jealous, right?
Well,
Well, let me tell people a little bit about you, and then we will jump into this. So, Scott Lask is a driven and forward-thinking professional with a strong passion for financial markets, investment education, and personal growth. Scott came to Wall Street in 1983 and learned early on that a robust, active risk management strategy was an absolute to achieve growth. Without one, you would be left behind. One of the key lessons that he teaches is that our in their work-life optional course is how to build the right risk management strategy for you. With a background in strategy, market analysis, and portfolio management, while helping people achieve a truly work-optional life, Scott has cultivated a reputation for simplifying complex concepts and teaching them in kitchen table English, leaving folks informed, empowered, and relaxed. After 42 years as a financial advisor, the result is a step-by-step plan to achieve a work-optional life. Scott is also the author of Let's Win, Let Wall Street Work for You. But the number one priority to Scott is his family. Married over 43 years to Karen, they have 3 children and 2 granddaughters. Also, Scott is a diehard Led Zeppelin fan. And you'd never know that by looking at you. But again, Scott, welcome. We're going to have such a great time.
thank you. Thank you. It's good to be here.
Well, you have had an incredible background. How is it that you got to where you are today?
I would have to say it really came from a very harsh financial setback myself.
Oh.
Early on in my career, I did a pivot into biotech venture capital, but I followed Wall Street's playbook, which was, invest for the long term.
Mhm.
And once I got pushed off the cliff and bounced a few times, I realized that this is not working. It was a very big hit. I got pretty much wiped out and had to start over again. And at the same time, I did have 3 small children,
Mhm.
my own house, and Karen and I had just bought a place for her parents, which we were helping pay some of the mortgage.
Mhm.
And I realized that I had no risk management.
Mhm.
If buy and hold works under a certain set of conditions, that depend on one thing, the market behaving.
Right.
Well, as we've seen just in the last few weeks, the
It goes up,
market
it goes down.
behaves right. Because if you think about it in the abstract, it really is the nerve center
Mhm.
of the economy.
Mhm.
And it is the purest form of supply and demand because I don't care what has a price.
Mhm.
It's either there are more buyers or more sellers, and that's what influences price.
Mhm.
So I started learning every risk management tool I could find.
Okay.
And primarily, and this is the golden nugget that I always love to give,
Mhm.
you have to look at the stock charts because here's the dilemma the average investor has, and even professionals.
Mhm.
let's say you're Goldman Sachs and I'm Morgan Stanley, two of the biggest names in the business,
Mhm.
and you love Apple, but I think Apple's best days are beyond them.
Right.
Okay, well, which one of us is going to be right?
Mhm.
That's the problem.
Right.
But when you
It's a
look
50-50 chance there, which,
exactly,
if that's
exactly.
your investment strategy, that's not very good.
I don't like 50-50 odds. But when you look at a stock chart, and let me just say this for your audience benefit, okay? You don't need great skills. You don't need intensive study or degrees to what you really need is just two eyeballs that work because I can take anyone in just a few minutes and show them how to read a chart, but more important, how to spot when it should be a buy or when it's something just stand back.
Mhm.
Because most investors don't really understand how to make money when things are going down, which is called shorting stocks.
Mhm.
And there's a lot of precautions that I would, really caution
Mhm.
people with. But the truth of the matter is, if you can avoid those stocks that are truly in a downslope,
Mhm.
you're going to do better.
Mhm.
The great thing for me about charts, which is why over the years we've been able to spot, what we call high probability breakouts, is that there are several patterns
Mhm.
that continually repeat.
Okay.
Let me see if I can bring this across in kitchen table English.
Yes. Yeah, because I'm that's about my level.
Okay, okay. So let's put it this way. When we go to a dentist,
Mhm.
before they drill, what do? They take x-rays.
Right.
Now they know what we're looking at. Well,
Mhm.
think of stock charts as an x-ray
Okay.
of the investment
Mhm.
that you're looking at, whether it's index or mutual fund,
Mhm.
whatever it is.
Mhm.
The first thing you'll understand is who's sitting behind the wheel, who's driving the bus.
Mhm.
Now, that's important because think of this wonderful platform we're conversing on right now,
Mhm.
Zoom. And I do this when I teach the class,
Mhm.
okay? And when I hold the public events to let people know who we are and what we can do for them. So I showed the chart of Zoom, and Zoom came public in 2019, and the stock ran from like 60 and change to 100 and change, and then it just died.
Mhm.
Well, what happened towards the end of 2020?
Yeah. Then
COVID.
COVID hit.
Right. And the stock
Mhm.
literally went from the low 60s, almost a straight
Mhm.
line to
Right.
$559.
Because
Great.
they were smart. One of the things, if I can interject, that they did was there were several platforms out there that you could do this on, right? But Zoom went, all of the schools need to be using something. So let's tell them they can use it for free. And then, of course, your kids were using it. Well, I might as well use it too. And then I was going to do the paid version.
Right. Exactly. And the stock really, I mean, think about it. Even if you bought it at 120 and held on, you have a stock go up 400%. Now, here's where most investors and most advisors fall short.
Mm-hmm.
Okay, so now you got a big winning. What do you do with this?
Right. Do you hold? It's like poker. I mean, let's be honest.
But that's why charts will
Mhm.
take away
Mhm.
that element of betting and gambling because the chart will tell you the whole story. The chart will tell you when the sellers come in, okay, where they'll reach a point where they're done and the buyers come back. It's called consolidation.
Mhm.
I liken it. You and I go out. We have a wonderful dinner.
Mhm.
And between the appetizers, the salad, and the main course, of course, they want to know if we want dessert. But what do we tell them? Give us about 10, 15 minutes. Well, stocks do the same thing.
Mhm.
So anyone following the chart would have seen that, okay, when it started dropping from 500 and change, there were certain points along the way that they could have said, all right, let me take some of my money out.
Mhm.
Let me do this. But past a certain point, and
Mhm.
this is what we call last line of support. If you don't get out, and I do this in some of my live events. I literally show the cartoon of Wile E. Coyote going over the cliff.
Yep. And
Uh,
then the anvil lands on him.
right. So going back to my right. That's
Mhm.
exactly right. So going back to my comparison, okay, of the dentistry and stuff. If you did not get out, all right,
Mhm.
you suffered 82% loss.
Mhm.
So I actually had a client many, many years ago
Mhm.
who had about 35,000 shares of a company called Alexion Pharmaceuticals, which he bought like an average of $15. He and his advisor watched it go all the way to 120. They never sold one share.
Mhm.
And then during the 2001, 2002
Mhm.
dot-com collapse,
Mhm.
he watched it go all the way back to 14.
Mhm.
That's not how you create wealth,
Mhm.
because the single most important advantage that Wall Street offers that no other investment arena can is the instant liquidity.
Mhm.
You can sell. Now, so anyone who was looking at those charts would have, when the stock got down to $295, okay, great. Believe me, I knew a lot of guys that their wives were like, so let me see if I understand this. The stock hit 559,
Mhm.
you let it drop
Yeah.
like
How much did we just lose?
300 points, right? Okay.
Mhm.
Well, around that time, Wall Street came out as always and goes, oh, it's down from 559 to 295, 300. It's a screaming buy.
Mhm.
And for a short time, they were right. Now,
Right.
keep the 295 price in mind.
Mhm.
He'd go back to 388. Okay, everyone's like,
Huh.
oh, okay, panic's over.
Made my money back and then some.
Right, but then it went back down.
Oh.
And what happens when it gets to 295? Everyone goes, well, it went back up the last time. No,
Yeah. I'm
it
gonna
didn't.
hold. Mhm.
Right. From that point, it dropped to as low as 56 and change over the following 9 months.
Mhm. Yeah.
So I personally have found that not only can I spot big winners
Mhm.
early,
Mhm.
um, because, excuse me, the allergies are really,
I know.
just take a
Oh yeah, we call it pollen season. I mean, it just
yes,
pollens
that's
down
exactly
here.
what's happening. So when we see something like that,
Mhm.
we are constantly looking for it's done this,
Mhm.
and now it's done this.
Mhm.
And when it trades in what we call a channel,
Mhm.
goes up a little, down a little, up a
Mhm.
little,
Mhm.
that's where we're going to get the final verdict. And I apologize to your viewers.
That's okay.
I'll get better.
We all understand pollen season.
Yeah, let me take another sip.
Mhm.
I'm going to mute myself 1 sec.
Well, and it really is something that is confusing. And I love that you are explaining this in a way that is making it easier to understand. Because of course we're always thinking, like you said, it's going to go back up, and and this is where I liken it to gambling, right? You are gambling. Most people who have not taken your course, um,
Well,
we're thinking, I don't know when to get out, and we always want to think it's going to go back up, right? And we're really scared that we're going to sell at 150, and tomorrow you wake up and it's 500, right?
right, but you see, part of that, mentality is the fact that Wall Street forever
Mhm.
has only had one playbook: buy and hold for the long term. Now, it's true. They usually, the big companies
Mhm.
always come back. But the
Mhm.
question is, do you have enough time
Right.
to
Yeah.
wait out the recovery?
Are you 20 or are you 70?
But even if you're 20,
Mhm.
then when I was teaching my kids about this, I said to them, so what's the difference? Why? You
Mhm.
think that 10 years? How do you know you're going to be here in 10
Mhm.
years?
Right.
So the charts allow you to not only establish your upside
Mhm.
projections,
Mhm.
but right from the get-go, we're giving you a risk management
Mhm.
setup.
Mhm.
I'll give you a personal example. So the software sector has gotten really beat up.
Mm-hmm.
And it probably will continue because the AI interruption is hitting
Right. People
where
aren't sure
bigger.
what's going to happen. Mm-hmm.
Well, yeah, I mean, it's like, when you start hearing that, the skilled people that do the coding, which, I mean,
Mm-hmm.
their brain is in a different place than mine.
Mm-hmm.
When they're telling you that, yeah, they let AI do the coding and now they just check the work, that tells you a lot. So software stocks are suddenly under the gun because,
Mm-hmm.
well, if AI is going to do this and do that, well, how are you going to make money?
Mm-hmm. Right.
So the vehicle that I wanted to play it in for my own accounts was it's called an exchange traded fund. It's really, it's somewhere between a mutual fund
Mm-hmm.
and a regular stock. You can buy and sell all day long.
Mm-hmm.
And okay, so I bought the software one. And why did I buy it? Because it went from 117, it cratered all the way down to 80.
Mm-hmm.
And 80 was a significant price because a year or two earlier in the sell-off, that's where it found what we call support.
Okay.
That's where the selling stopped and the
Mm-hmm.
buyers started coming back and the
Mm-hmm.
stock went back to, okay. So I bought it when it started turning back up. I paid 85 and a half,
Mm-hmm.
but at the same time, I put in an order on the books that if it gets to 80 and crosses below, to sell it out
Right.
immediately.
Yeah. So you're not having to follow that. It just happens.
Right. And I set it up for a reason because I knew that particular price point, if it didn't hold, the next stop was
Mm-hmm.
72. If
Mm-hmm.
that didn't hold, the next stop was 65.
Right. Mm-hmm.
So I lost total 6.7%. Big
Hmm.
deal
Mm-hmm.
because it's easy to make up.
Mm-hmm.
The problem that people have in not managing risk is when you lose 40%, which a
Mm-hmm.
lot of people did in
Mm-hmm.
'08
Mm-hmm.
and more, you need the markets to go up at
Mm-hmm.
least 65% just to get even.
Right. That's not going to happen.
It's not going to happen so fast.
Mm-hmm.
Historically, and this is something that maybe will help your, listeners. Historically, after a big market sell-off, whether it's the dot-com collapse
Mm-hmm.
or, the mortgage collapse,
Mm-hmm.
you will see the market when it does rally again, you'll get a good bounce of about 20,
Mm-hmm.
25% in the
Mm-hmm.
market. Well, if you lost 15%,
You're still in the
okay,
hole.
no, if you number, but if you lost
Mm-hmm.
15% and the market rallies back 20,
Oh,
25%,
you
you
gained.
pretty much
See, this is my problem. I can't do math.
no, no, that's okay. That's why I do what I do.
Mm-hmm.
So if you limit your loss to that, and then you get the typical bounce, you're back to even and starting to grow again.
Mm-hmm.
Most people, it took them
Mm-hmm.
2.5 years to start growing again after the '08 crash. In the dot-com crash, to put it in perspective, because everyone will tell you that they were diversified.
Mm-hmm.
You know what that really was?
Mm-hmm.
They went from two dot-com mutual funds to six.
Oh, goody.
Right.
That's not what diversified means.
No, the problem was that many of those dot-com companies no longer exist. I mean,
Mm-hmm.
Global Crossing
Right.
was the biggest names. We made a lot of money with it, but
Right.
it's no longer on the
Mm-hmm.
map. WorldCom, all of these
Mm-hmm.
companies. So it took the NASDAQ 100 index,
Mm-hmm.
which is, the equivalent of the Dow Jones for the tech
Mm-hmm. Mm-hmm.
market. It took 13 years for it to fully recover and grow.
Yikes. And
Yeah,
most people can't wait that long, no matter what.
and there's no reason they need to.
Mm-hmm.
Because one of the other things is if you're not investing in, your IRA, if it's in your taxable account, your name joint with your
Mm-hmm.
spouse, okay? Well, if you do take losses, systematically, you can hand those losses to your accountant and say,
Mm-hmm.
here are these losses that I booked, some are short term, some are long
Mm-hmm.
term, and use them against my profits and my income.
Mm-hmm.
So they do come in handy.
Mm-hmm.
But too many people wait until December to
Mm-hmm.
do it. No.
Right.
Okay.
Right.
So the fact that they're not using the instant liquidity
Mm-hmm.
is really, kind of startling.
Mm-hmm.
And I just can't counsel anyone to buy anything without looking at a chart.
Mm-hmm.
And I will tell you that is a separate beta group because I started the Center for Work
Mm-hmm.
Optional in September
Mm-hmm.
after 42 years managing money on the
Mm-hmm.
street. we started a whole new beta group of ideas that were, we use our
Mhm.
process.
Mhm.
And we've gotten the performance we've looked for from October to the
Mhm.
present. Our year to date is
Mhm.
well beyond anything.
Mhm.
But I will tell you flat out, the only reason we've been able to establish these positive returns is because of charting.
Mhm. Mhm.
So,
Right. Yeah. And you know, like I said, now I'm very fortunate. I'm married to somebody who is very good at this. You know?
right.
And so I just kind of I know enough to be dangerous. But it's interesting because like we mentioned the word diversified. To me, diversified is not just stocks. I mean, it's, there's, you want a variety of stocks, but other things too. I mean, IRAs, whatever you can, there's all sorts of different things. And if you've got young kids, there are education things you can be investing in and all of
Right.
those.
There's going to be new educational
Right.
accounts that are coming out. It's a
Right.
good thing.
Right. And those are great things to be looking into. And it is one of those things where I have learned as I've gotten older, but I also one of the funny things when I was much younger, I was much less risk adverse, right? Because I had longer to build it back up. And when I first started investing, there were several stocks that were fairly new. And one was called IBM,
Oh,
and the
yeah.
other was Apple. And I happened to work for computer programmers. And I thought, okay, this is good stuff. And so I invested quite a bit in that. And they did well. I mean, this was long enough ago that they were doing well. And then I got married and my husband went, "Oh, no, let's get rid of some of that." And now we still kept some, but that was back to that diversification thing, and
Yeah.
and I guess my philosophy is, if you lose all of one, how badly is it going to affect you? So, say Apple had gone bankrupt. If that was going to wipe out half of my investment portfolio, that
Yeah.
was not a good thing.
The thing that charts also help you with
Mhm.
is that they tell you which sectors are attracting the money and which
Mhm.
sectors are losing the
Mhm.
money.
Right.
And that's how you make adjustments.
Mhm.
Okay. Because yes, I'm confident that Apple and Google and Microsoft and all these big names are going to not only be worth more 10 years from now than they are today, but if somewhere in the middle they lose half their value, that's nothing that I need to participate in.
Mhm.
Because I can always go back in.
Mhm. Mhm.
And especially if you're building within your IRA
Mhm.
or pension where you don't have to pay the taxes
Mhm.
now, it makes it even much
Mhm.
easier.
Mhm.
Um, one thing I will say is that what people have to recognize is that risk is something that changes.
Mhm.
So if you buy, like for instance, when we bought some of the oil stocks
Mhm.
early in January,
Mhm.
again from the charts.
Right. Yeah, that was a really wise
Okay, but
thing to
let me let
do.
me let me let me show you how Wall
Mhm.
Street actually
Mhm.
leaves
Mhm.
clues.
Mhm.
Okay, one is with the options market, which is it's a whole different case study.
Mhm.
Okay, but when in January, actually right after Christmas, they started noticing because I do a scan every morning.
Mhm.
I started noticing that a lot of the patterns that I look for were showing up in energy, oil production, oil exploration,
Mhm.
oil equipment
Mhm.
service. And I mean, there's no way that I have anyone in DC calling me up to say,
Right.
by the way,
Yeah, we're
in
thinking of
March,
kind of
the
launching
end
a
of
little
February, we're going to
excursion.
bomb the hell out of the Middle East.
Yeah. Mhm.
But having had four
Mhm.
decades of
Mhm.
watching this,
Mhm.
this was money that somehow knew.
Mhm.
Okay.
Mhm.
And I don't care how they knew.
Mhm.
For me, watching the chart formation
Mhm.
showed me that the buyers are in control,
Mhm.
100% legitimate,
Mhm.
100% ethical,
Mhm.
100%
Mhm.
legal.
Mhm. Right.
Okay.
Mhm.
So you can see these clues every single day. Let
Mhm.
me give your audience and you
Mhm.
one of the simplest things that we use, which has been one of the most powerful. Every week, every day, especially like the Wall Street Journal or the New York Times or any real business publication, they print the 52-week highs and the 52-week lows.
Right.
Right. So take a look.
Mhm.
When I screen now, the screen that I'll pull up can have anywhere from 500 to 1,000 different issues on both. So I'm only looking for the big Fortune 500 names. Okay. Now, with younger students and stuff, I'll show them how to finesse it.
Right. And they might
Right.
be interested in some of the, shall we say, edgier, newer, whatever,
Well,
type of
and it's
things.
not to say that I wouldn't. And the truth of the matter is, once the biggest overhang right now in the stock market, obviously, is what's going on in the Middle East.
Right.
And I think that most of the world is saying, okay, we're good
Mhm.
for a short time because this will be better for the whole world.
Mhm.
You know, crazy people with nuclear bombs is never a good idea.
No,
No,
no.
no, no, no,
Mhm.
no, no, no.
Mhm.
But nevertheless, once that overhang is gone,
Mhm.
and this is where having the charts is very handy. Okay, I already have stop prices set on my oil stocks and energy
Mhm.
because they're going to drop like a brick.
Mhm. Right.
Want to drop like a brick, and
Mhm.
we're going to go back to gas at
Mhm.
277 a gallon.
Mhm.
Okay, so where does the money go now?
Mhm.
That's why you look at charts because
Right.
when that
Mhm.
transition
Mhm.
happens, okay, yes, we'll still have profits.
Mhm.
We won't be, selling at the
Mhm.
highs, but who cares?
Mhm.
Okay. So what I say to, all of your listeners is the charts will tell you where to sell. They will teach you how to harvest. And I think, when you came to that meeting,
Mhm.
you saw how the chart can tell the whole story.
Mhm. Right.
Okay. So the other thing I want to give to your listeners,
Mhm.
the driving force behind any effective risk management strategy, I don't care whether it's in the stock market, whether it's you and me running a company,
Mhm.
always has to pivot with current economic policy,
Mhm.
especially the policy coming out of
Mhm.
Washington.
Right.
So what I tell people, and keep in mind, I was a political science major.
Mm.
And what our professors taught us in the mid and the late 70s was everyone is full of it. Your job is to find the shreds of truth they're trying to
Mhm.
give.
Hey,
Okay,
they still taught that when I was there in the 80s.
of course. Okay, so with that in mind, we know every 4 years there's going to be a presidential
Right.
election.
It's going to change. Mhm.
Right.
Mhm.
And you're either getting 4 more years of the
Mhm.
same or someone new.
Mhm.
Right. And like
Right.
you just said,
Mhm.
they all have a different
Mhm.
policy.
Right.
Just adjust to that
Mhm.
policy.
Right.
Look,
Environmental is probably one of the things that, like you said, oil was going up because,
okay.
the Republicans like that. But, when it's Democrat, well, they like to
Right,
do
right.
more
And it's
environmental.
not a
Yeah.
question
Mhm.
of which
Mhm.
party is nicer
Right.
or better.
Mhm.
I that's a
Mhm.
that's a
Yeah.
Facebook nonsense
Right.
call.
Mhm.
But it didn't take you didn't have to have a doctorate in economics when President Biden was sworn in, his one of his first executive orders was to shut down the Keystone Pipeline.
Right.
Doesn't take
Yeah, that's when you're thinking, methinks
okay,
maybe I
what does
shouldn't
that
be
mean to
investing in
my pocket?
oil. Mhm.
Right.
Mhm.
What does that mean to my pocket?
Right.
Okay, so what we did
Mhm.
was realizing that,
Mhm.
okay, the price of everything is going
Mhm.
up because the cost to get it to the store is going to go up.
Mhm.
Great. So corporate profits are going to go down. So we trimmed a lot of our big
Right.
positions,
Mhm.
put a lot of money in short-term cash, but we
Mhm.
also did the other side of it.
Mhm.
Well, commodities seem to do well
Mhm.
during inflation.
Mhm.
So
Right.
he bought things like gold and silver and
Mhm.
metals and
Mhm.
commodities and all, and we did okay.
Mhm.
Instead of getting dinged 20-30%, we had very small losses in
Mhm.
2022. So policy is the main
Mhm.
driver, and you have to navigate markets differently.
Mhm.
I can tell you but you learn this when you read charts all the time
Mhm.
when the volatility started getting very goosey in early November,
Mhm.
and one of the ways I saw it was because I'm doing this a long time, so I know my way around the
Mhm.
options market. I just caution
Mhm.
your listeners. Options can be very useful,
Mhm.
especially for generating income. But if you're looking at it as a stock substitute, it's a whole different learning curve.
Mhm.
And the volatility is much different.
Mhm.
So I noticed that the volatility was getting more erratic. So we completely stopped all our options positions.
Mhm.
As it got goosier and goosier,
Mhm.
I'm still right now, I'm 55% cash.
Mhm.
Okay. And that's part of the reason that, we've done well. So when this market does finally
Mhm.
find the end of
Mhm.
whatever is happening,
Mhm.
I got my list.
Right.
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 And then,
And there will
yeah,
be an end, and actually it's not a it's a pivot. Maybe that's the
well, in
key
this
word,
case,
right?
I hope it's
Mhm.
an end because
Mhm.
that would
Mhm.
mean that
Right.
the straits are open, the
Mhm.
flow of oil is going to be normal. It's going to be, now we just focus
Mhm.
on what are they fighting
Mhm.
about in Congress
Mhm.
and
And tariffs and oi.
right.
Mhm.
I mean, but
Mhm.
you look at
Mhm.
this, and this is why,
Mhm.
again, this is my personal opinion, but I am willing to lock heads with any investor.
Mhm.
You've got so much money pouring into America right now.
Mhm.
Okay, hate hate anyone you want,
Mhm.
but I mean, Toyota just pledged $1 billion last
Right.
night.
Mhm.
That means there's going to be
Mhm.
construction.
Mhm.
That means that someone who owns a coffee truck that sells rolls
Mhm.
and muffins is going to be getting another truck to go to the other.
Mhm.
So
Right.
that's
Mhm.
how you play it. But
Mhm.
I think the great thing about stocks, and I
Mhm.
talk about it in my book, is there's almost no barrier to entry.
Mhm.
Like you don't have to be in the Ivy League club.
Right. Yeah.
Okay.
And I mean, that's the thing. Maybe you're in your early 20s and you've got an extra $200 a month. That's enough. And and it's okay.
My younger son, well, all my kids are investing, but my youngest son, he and his brother, they own a mobile entertainment company. So obviously, when COVID hit, they took a bad.
Oh, they took a beating.
Right, right.
Mhm.
They were saved because they went into the party rental business, but it took them a couple of years to get back on their feet.
Right.
So he came to me and goes, Dad, I don't have a lot of money, but I know I need to start investing. I
Mhm.
said, fine, you got some safe money? He goes, yeah, I got that.
Mhm.
So he started taking as little as $25 a week.
Mhm.
I told him to go to Robinhood because you could buy fractional shares.
Mhm.
You could
Yeah,
buy
you're
like
not buying
10,
a
right,
whole share, you're buying
right,
a half or
exactly.
whatever. Mhm.
Make a long story short, he started doing that.
Mhm.
He started using what I taught him about charting
Mhm.
and how to look at markets, the
Mhm.
52-week high and low list. And then he started having more money to put in.
Mhm.
Um, through last night, he was over $40,000. He only started
Oh.
years ago.
Mhm. Mhm.
Not bad for a kid who's not 34
Mhm.
yet.
Right. I mean, that's a down payment on a house. Or,
It's
I
a
don't know
good
if he's
bet.
one of the ones that has the grandkids, but
No,
that's
no, he's not the one that has the
I was gonna
grandkids.
say that's a college
The older
degree
one
right
is
there. Right.
the older one is doing just fine.
Right. And it is, I think one of the biggest things that I learned, long ago when I started doing is that little word called patience. Right? There
Well, I
is
mean,
no get rich quick scheme. People are going to tell you, oh my God, you can invest in that and overnight you're going to be a bazillionaire.
no,
No.
no, because when I got onto Wall Street, before I started training, my uncle's childhood friend was a bigwig at Merrill Lynch.
Mm, mhm,
And I remember sitting with him on a beach in Cape Cod before I left for training.
mhm,
And he looked me straight in the eye. And he was the guy that built their mutual fund program.
mhm,
So he knew how to invest.
mhm,
He goes, the stock market will make a moron out of anyone. He said it a little differently.
mhm.
Think of a four-legged animal that,
Humble you.
right, right, but he's a little bit stronger vernacular.
A little dicier words.
Right. Market will always prove you wrong. Okay. For instance, I had one stock that I had sold short, betting it would go down. So that the day when I came in and the market was looking like it was going to be down 500 points, that stock was up. And I'm like, what are you kidding? What are you talking about? But it is what it is. Okay. And, I didn't like the way it was trading for, the week or two I had. So I closed the position. Big deal.
Right.
Okay. I think the other thing that the public desperately needs, if they want to get to work optional, is they have to learn the different choices they have to actually create. a lifetime income. And, you know, Deb, you and I grew up at a time when companies still offered a real pension
Right.
that was guaranteed by the government, that, you know, there was a fund. And I can tell you to this day, when I play golf in the summer, the happiest folks out there are the guys and gals that were teachers,
Mm-hmm.
police
Right.
officers, nurses, because they know, like, you know, like with the Social Security check, they know every once a month the check's coming.
Mm-hmm.
Most people don't have that.
Mm-hmm. Right.
And here's where I think most of them feel let down.
Mm-hmm.
They got a 401k. They've also seen their 401k go from 1.5 million
Mm-hmm.
to 800,000 in the blink of an eye.
Mm-hmm.
Their 401k does not guarantee them an
Mm-hmm.
income.
Right.
So, yes, you can buy certificates of deposits, you can
Mm-hmm.
buy treasuries, you can buy bonds, you can buy mutual funds, but those things change too. You know, when I got onto Wall Street in 1983,
Mm-hmm.
I could get you 10% tax free, triple
Oh,
tax
that's pretty
free in New
good.
York,
Mm-hmm.
right, for only a 10-year hold.
Mm-hmm.
You,
Mm-hmm.
you can't even come close to that.
Right.
Right. So it changes. So how can I have an income that can never go down?
Mm-hmm.
Okay. And if I let it grow, will go up.
Mm-hmm.
And the answer is you have to look at the insurance industry.
Mm-hmm.
I will tell you, and I did this with lots of clients, the variable annuity is the most misunderstood, misnamed product that investors can use because it really does give you a guaranteed lifetime income.
Mm-hmm.
The risk, obviously, is the stability of the insurance
Mm-hmm.
company. I can tell you in New York, which is the toughest state for insurance, it's not a worry
Mm-hmm.
because if you're smart, you're only dealing with the top companies.
Mm-hmm.
Hey,
Right.
God forbid something happens, you wouldn't even know about it because overnight they'll have a new name
Mm-hmm.
and everything will be fine.
Mm-hmm.
But here's why it works so good, and here's why I don't miss the regulatory world. Most people know, yeah, it's an insurance product, which means it's a lot of complications, and most of the contract I wouldn't understand without a lawyer. Right. But in its purest, simplest form, it is a selection of mutual funds,
Mm-hmm.
all types.
Mm-hmm.
Most of these the premier companies offer you 100 or more different funds to buy. And on that, you add a couple of riders, you know, like when you got your house and the auto guy said, well, let's put an umbrella rider on. Okay. So you buy a rider that says, hey, if in 12 months, the 100,000 you put into the contract has grown to 120, we're going to bump up your payment to off of the
Mm-hmm.
120,000. So as it grows, your income can go up.
Mm-hmm.
Then there's another rider we used to show people. You know, there's going to be years when the market loses money. Want to pay a little extra, they can give you a 5% bonus in those
Mm-hmm.
years. So wait a second. I can buy anything within 105 mutual funds.
Mm-hmm.
If it grows, I get a chance once every 12 months to lock it up
Mm-hmm.
and get more income.
Mm-hmm.
And if the market goes down and the account value goes down, I can get 4% or 5% more, whatever the bonus program is at that time. Yes, that's exactly right, Mr. and Mrs. You know, one
Mm-hmm.
day soon to be retired investor. What's my downside? Well, okay, there's always, you got to let the insurance company have time
Mm-hmm.
so that they can build this,
Right.
which is usually why you've got to be willing to commit the money for 7 to 10 years.
Mm-hmm.
Because it's like a
Right.
CD. You
Right.
break it
And so,
early,
like,
they
if
can whack
you're
you over the
doing
head.
a college fund, that may or may not work depending on the age of your kids.
Okay, so now imagine this from, you know, your pocketbook.
Mm-hmm.
So you've just made a couple of moves, and now you know on the worst case based scenario that if I let this thing be permanent,
Mm-hmm.
even if the account value goes to zero,
Mm-hmm.
they still got to pay me because I
Mm-hmm.
paid them all those years.
Mm-hmm.
I'm going to get, like in one case, I had a client because of their, you know, net worth. We were able to put enough in the annuity that it grew to a point where it pays this person $60,000 a year.
Ooh, that's
That's an
nice.
extra 5 grand a month.
Mm-hmm.
Well, when you add on the fact that they have a bond portfolio that
Mm-hmm.
pays 50, they get about 70 from Social Security combined. They're paying their bills.
Mhm.
They're in good shape.
Mhm.
Okay. When I would tell people, guess what? You're now set. Leave everything. Let us just make the adjustments on year at work optional.
Mhm.
It's like you took 10 years off their life.
Mhm. Right.
And that's the hope. Because at the end of the day, Deb, I don't care what path you take to grow money. We all want the same outcome. We
Right.
know that if I can't work, if I
Mhm.
don't want to work,
Mhm.
bills are paid.
Mhm.
I can live my life. I can
Mhm.
help my family. I could do a couple of silly, crazy things with it.
Mhm.
Like me, at the end of 2026, I will spend some serious money and buy the double neck guitar that Jimmy Page made famous. You but
Mhm.
that's me.
Mhm.
So that's a big element, and there's
Mhm.
also a lot of things people can do,
Mhm.
to enhance their income.
Mhm. Right.
So
And it's funny because I'm thinking about how my mother and my mother-in-law invested. Because they did, they invested. Now my mother was 100% risk adverse. So
okay,
she bought CDs. That's it. And my husband tried to get her to at least no, no. But she was and here's the thing, that I think we have to be comfortable with what's going on. She was not comfortable doing anything else. And she understood she was not making as much as she could, but her comfort level was what was important. And then there was my mother-in-law who was, she had money to invest. But she was very devoutly Catholic. And I never knew this because I'm not Catholic. The Catholic Church actually lists there, hey, here's companies you can invest in, and here's companies we prefer you not.
okay,
And so, that was her guideline. So that was perfectly fine. Just made sure that she didn't invest in the ones that were gonna, make her get struck by lightning. Um, and
yeah, that's a good idea.
yeah, yeah, and so, but yeah, we have to be comfortable with it. Some are gonna want more risk, some are not. And that it's age dependent. It's, do you have kids? I mean, all those things. But it's like you said, we want to hit age 70, 80, whatever, and know that we can still live comfortably.
Exactly.
And I think that is the thing that so many people are rightfully concerned about.
And when you put an element into your financial
Mhm.
structure that guarantees you lifetime income,
Mhm.
you are relieving a lot of pressure because
Right.
let me give you an example.
Mhm.
Lovely couple. I was introduced to them in 2006.
Mhm.
Both worked for IBM up here
Mhm.
in the Hudson Valley.
Mhm.
Between their IBM stock and all the other things that would give them more stock
Mhm.
and their other investments, they had 5.5 million liquid,
Mhm.
meaning in the
Ooh.
in the market.
Mhm.
Okay. And they wanted to retire in about 2 years.
Mhm.
So we did all the math and
Mhm.
everything. Long story short, they went with another advisor who did not advise them on the variable annuity and
Mhm.
other forms of guaranteed
Mhm.
income. I get a call from them right after New Year's in
Oh
2000.
no.
Wait, Scott, can we come in to see you? I go, sure. What's up? Well, we took a hit. I'd like to talk to you.
Mhm.
All right, fine. They come in. We really got beat up. Well, look, a lot of people did.
Mhm.
I guess you weren't happy with the risk management strategy and setup. Well, yeah, we're down to about 2.8 million. I said, well,
Ooh.
I know it hurts, but if I remember right, you had high quality companies and
Mhm.
you might want to make some adjustments to accelerate, but you should be okay, but it's gonna take a couple of
Mhm.
years. Well, that's not really what we're worried about. Okay, well, what are you worried
Mhm.
about? Well, we had, remember, a whole bunch of bonds. I go, yeah, they were probably called. Yeah, they were called because interest rates went down.
Mhm.
Companies paying you 6%, and then they can borrow money at 3, you're losing that 6%
Mhm.
bonds.
Mhm.
Companies like General Electric and other great companies cut their dividends or completely eliminated them.
Mhm.
So this whole stream of income that
Mhm.
they were depending on was no longer there.
Oh.
Right. So here's the other problem.
Mhm.
Their plan was to take 3% a year from their portfolio.
Mhm.
Well, to take that same amount of money equaled 8%.
Oh.
their portfolio.
Mhm.
So, we eventually took care of them. It took us about 18 months, but they don't have to worry about working
Mhm.
anymore.
Mhm.
Okay. But that's the point.
Mhm.
And that's why it irks me when I see certain advertisements on TV from money managers saying that, oh, annuities bad. Yeah, annuities can be bad
Right.
with the wrong investor.
Mhm.
But what people don't know, because it's kind of like a dirty little secret, is when your friend who worked for the city of Chicago
Mhm.
puts your papers in, you know what the city of Chicago does? They don't write the check directly from the pension.
No, it
They
goes
take a
through.
piece of the money, they go to an insurance company,
Mhm.
go, I
Yep.
need this payout for the next 20 years. They
Mhm.
buy an
Mhm.
annuity.
Right. Right.
So,
Mhm.
right. And there's a lot of tools that Wall Street is not necessarily going to show
Mhm.
because unfortunately haven't always done a great job
Mhm.
in teaching it. Um, can I share a word of caution to your listeners
Oh,
on?
yes, most definitely.
Okay.
Mhm.
What I did, even when someone told me that they've already bought annuities, and I had a three-step learning curve.
Mhm.
So what I would do is get all the information I needed to make the right assessment,
Mhm.
and I would put together a hypothetical
Mhm.
illustration. I would hammer them with, we have no idea what the returns are going to be.
Mhm.
This is looking at history to try to guess the future.
Mhm.
But we've usually been within a tight rope.
Mhm.
So the problem is that too many of these people thought they knew everything. No, I want you to take notes
Mhm.
and I want you to sit on our discussion for a week.
Mhm.
And then we're going to have another call.
Mhm.
And I'm going to answer your questions. And then you are going to explain the annuity to me
Ah. Mhm.
as if you were the advisor and I
Mhm.
was the client.
Mhm.
And when you can explain it to me within a compliant,
Mhm.
type of atmosphere,
Mhm.
then I'm going to tell you, take a few more days
Mhm.
to make your final decision. Because now I know you understand
Mhm.
the do's and the
Mhm.
don'ts. And I never had any issue at all.
Mhm.
Okay. I had nothing but happy clients whenever because I did a ton of, I'd say about 25% of my business was in that space.
Mhm.
And the regulators always look at that because it typically is a higher commission.
Right. Mhm.
And unfortunately, there are people that,
Mhm.
no matter
Take
what
advantage.
industry,
Mhm.
they sell the product that pays them the most.
Mhm. Mhm.
Right.
Right.
So no, but we never had any
Mhm.
issues or worries.
Mhm.
So but let me ask you something from where
Okay.
you're sitting. When you're talking with friends and guests and all, like, like what aspects of the market um do you wish there'd be better information on, or that you could have more ease in adapting to?
Yeah, I'll be honest, all of it, because I think there's the impression that that they just don't they're not telling you everything.
Hmm.
And so it's and it is scary. And I think that's the other thing is we all hear the sky is falling, sky is falling, sky is falling. And we hear the bad things. Hey, I'd invested this and now I'm broke, or this company went bankrupt or got bought by X, or whatever it is. And I think that's, and so I think people then it just makes them fearful. And so then they put their money in the philosophical mattress, and they don't, they don't do anything with it.
Oh, because they're terrified of losing it.
Right. And of course, I think the thing that everybody forgets, there are no guarantees. I mean,
Which is why
Mhm.
to not use the unique feature of instant liquidity, the ability to buy and sell in a blink of an eye,
Mhm.
to manage your risk.
Mhm.
The one time that you sell because it was losing you money and it just jumps up out of nowhere, they're going to be 99 times that it's kept going down.
Mhm. Mhm.
Okay. Um, let me leave this, with you because I know we have, a short time left. The mission that I'm on is to help people get to a work optional life.
Right.
The
That's why you have the Center for Work Optional Living.
Right. And the two key engines that have been helping people um, are the ones that I used when I was practicing. And that is the subscription, the weekly cash cow ideas, which I'll explain in a second. And the other is the work optional signal bulletin. What the income one does, the cash cows, it literally shows people that you can charge your stocks rent every month. The technical term for the strategy is covered call writing. When I get new subscribers, they do get an onboarding so they understand how, because I find the ideas and I give them the entire setup. Here's what you're going to get. Here's what you may get if it goes higher. And here's where you say, you know what? I'm out. Stock went down. We're not taking a loss. Okay. That program has generated almost $26,000 year to date, and it's only in its third month of subscription. Okay. The other one, I'm almost hesitant to tell you what it's already achieved for this year because people don't believe me, but it's a double-digit return. Again, why? Because 3 months ago, the charts were saying you need to buy these oil stocks.
Danger.
Right. And again, there are clues left every single day. If your listeners got into the habit, forget the 52-week lows, if they just look at the 52-week highs and pick out names that they knew, first off, they're going to find a lot of companies that, well, wait a second, that's SC Johnson. They're under my kitchen sink. Oh, yeah, I have Apple in my pocket on my desk, Right. Okay. So the growth subscription, the signal bulletin literally is these are signals that we have seen over 4 decades that are high probability breakouts. They're kind of like Warren Buffett plays, except I don't look at the balance sheets. But I'm buying stocks that people left for dead. And
making a pretty penny.
Right. And trust me, my biggest challenge right now is going to be keeping an eye on the developments in the Middle East because the second and I pray to God it's soon. I don't want another one of our
For many
people in
reasons.
harm's way. I want the world at peace because I think the good news, which should be encouraging people, is you got a lot of players in the Middle East who heretofore were more interested in shooting people, and now they're going, oh, we can make money. We like money. Yeah, that's a lot more fun. Okay. You got a whole crowd of people over there that want prosperity. So when this thing finally comes to what we all hope is the right conclusion, I got to get out of these oil stocks quick.
Right.
Doesn't mean I'm not going to go back in them,
Right.
but I know they're coming down.
Yeah, the world operates on oil and the byproducts. I mean,
Right.
all of that. I mean,
Right.
that is not going away. We
And
can want solar, we can want all of that to our little heart's content, but no, it's not going to happen.
And Deb, here again is what will happen. Okay, when oil prices come down, and they're going to, that means gas is going to be cheaper. People are going to be spending money again. Construction will start up again. And so I think we're really in for a couple of really strong years. But I do want to leave a system with your listeners before we wrap up.
Okay.
Every bubble eventually bursts. The planet knows AI is the thing.
Right. For now.
But the cycle plays out the same way. Now they're calling it AI. 25 years ago, we called it the .com. Okay. Here's how you want to play it. Buy the good companies, the ones who are the general stores, because the gold miners out in California went broke. The general stores made a fortune. Okay. But you can buy some of the gold miners. All right. When people that you know who make real money, I'm talking like 500,000, a million plus, real money, are quitting their day jobs and now they're trading stocks in the basement or they're starting their own AI company. Sound familiar? Right. Big red flag. What I do when that happens is I get rid of all the fluffy stuff. I trim back my big heavy names, 20 or 30%, and I just sit on the cash. So I'm waiting for the next shoe to drop,
Mhm.
and it will happen. You know what's going to happen? You and your husband will be on the way to the airport or to dinner,
Mhm.
and the Uber driver is going to be giving you stock tips. Then you're going to get to the restaurant, and the waiter is going to be giving you stock tips.
Yeah.
And that point, and this is what I wrote in my book, that's when it will become the Walking Dead on Wall Street. Everyone's going to be running for the exits, throwing their stocks away, and
Mhm.
that's when you go shopping.
Mhm. Right, right. I love it. I love it. It's funny on the radio this morning. I listen to local news on, and I like them. They're pretty unbiased, and it's local for the most part. They were talking about all of this, and one of the things he said was, at some point, they will figure out how much money they can make charging the ships to go through the Straits of Hormuz rather than, and I thought, yep, yep. And it won't take long before they figure that out. And then they'll go, okay, you
Listen,
know.
the key is manage risk,
Mhm,
okay? And you will always be fine.
mhm,
Keep your losses
mhm,
small,
mhm,
you'll always make more money.
mhm.
So,
Right.
but I do want to make an announcement. We're going to go live with the growth subscription on April 6th.
Okay.
If people are interested,
Mhm,
they can reach me. My email is info at
mhm,
theworkoptionalmethod.com.
mhm,
I am on LinkedIn,
mhm,
on Instagram and YouTube. And I still like talking to people. So they can call us if they want at 845 774 2745.
mhm,
But probably we'll announce it on the day we light it up that for the first 30 days, we'll be giving away anyone who's interested a free copy of the work optional blueprint, which we usually charge about $10 for. And the first 100 subscribers to the Signal Bulletin will get a discounted price of $47 for
mhm.
life.
Ooh.
And then the
Mhm,
price will go to $79 for, you know,
mhm.
anyone past that.
Right.
So,
I
but
love it.
because you have given me grace
Mhm.
and opportunity, I will send you free copies for a whole month of both newsletters.
Very cool. And is it okay if I share them with my husband since he's the one who knows about this?
Absolutely, of course. No, listen, of course. And, um, let me put it this way. I might have 42 years managing money professionally, but
Mhm.
everyone has got a vantage point of life that they bring to the table. Your husband could be expert in certain areas that I wouldn't have a clue about. So I always love talking to investors. That's
Mhm.
part of the fun.
Mhm. Right. Yeah.
So
And I mean that's the thing is it's all about education and always wanting to learn because things change. I mean, 10 years ago if somebody said, "I think I'm going to invest in AI stock," we would have gone, "What?"
what is an AI?
Because
Right.
I work with purebred dogs and
Hmm.
AI is artificial insemination. And so I would have thought this is very confusing. Why are you
To
investing in this?
think? Yeah,
Yeah. And so it's about always to the level that you want, finding out what's going on. Folks, this is not put your heads in the sand and I'm guilty of that. So, yeah, just keep getting educated, keep, listening and more importantly, get in connection, get contacted with Scott and he's got great programs, great information and let's make work optional.
absolutely. And I always give away golden nuggets.
Mhm.
Okay. So you want to look at materials and industrials and start looking for your shopping list of home builders. You're early, but it's going to happen. You're probably 3 or 4 months early, but start looking at them.
Oh my gosh, I always ask for final thoughts. That was it right there. Well, I am Deb Creer. I have been having so much fun talking with Scott Lask. And until next time, everyone have a great day.
Tune in for our next program for even more trends, best practices, and techniques for how to make your business a success. The Business Power Hour, hosted by Deb Creer, is proud to be part of the C-Suite Network.